you buy a house in Italy and it's going to be your prima casa, your primary residence, is that something that will establish you as a resident in Italy? Is that something maybe we shouldn't be looking at doing if we're planning? And this is not, I want to clarify it, we're not trying to rip anybody off or avoid paying taxes. What we're trying to do is avoid the hassle and whatnot of the dual taxation and the legal fees and the stress involved with being audited like that. Now, obviously, when somebody comes over and lives in Italy, they sell their house, they move everything over, they are tax residents in Italy. But that said, there are a lot of people that spend a lot of time, we're included, in Italy. We would like to avoid double taxation because there would be nothing left. And what about this prima casa thing? Is that not a good idea? Well, how is that?
Yeah, so in Italy, there is this option, this opportunity to, when you buy a home, you can elect it to be your first home for which you ask it for a lower transfer tax rate to apply at closing. If you are not living, so it's interesting because the law says that you are entitled to the lower tax rate if you are already a resident in the municipality where the property is located. That will do it. Or you can establish residency afterwards. So you can buy, and within 18 months, you can establish residency. Actually, the law doesn't say that you have to keep your residency there for a specific amount of time. The law says you need to acquire residency within 18 months. And actually, there was a ruling pretty kind of recently now, it's a year or something ago now, in which the Italian tax authorities said that since you have 18 months to register, and since everyone now tends to be more mobile, you can buy a home, commit to move your residency within 18 months, move your residency, let's say month 5 or 6, and then life changes, life happens, you decide to move again, go overseas or something. You cancel your residency. So the tax agency has said that since there is no legal requirement to keep your residency for a specific amount of time, you can cancel your residency because at the point when you registered as a resident, that satisfied the requirement of registering within 18 months. So the lower tax rate is yours to stay. Also, if you register your residency, buy with the lower tax rate, and after buying, you deregister from being a resident, also that would not jeopardize or penalize you on that incentive that you got at closing. So it's really there's flexibility. So what I usually tell clients is if you have the ability or the opportunity to move your residency, elect at closing that option, and then establish your residency and see how you like it or not. If you don't like it, you can move back or change your plans. There's not mandatory. There is an opportunity to to have options. So I always recommend going for it because it's also easy to withdraw that commitment. You can file a letter with the tax authorities and say, I will give it up. So you pay the balance tax without penalties, which is an option too.
Yeah, okay, that's great. But that doesn't jeopardize, that doesn't, as far as the center of vital interest, does that go into that bucket and make it
So that's a great point. Yeah, that's a great point. And definitely establishing your residency and keeping it for more than 182 days in a tax year is definitely it creates a tax assumption of tax residency. It creates a legal assumption of tax residency. So what some people will do is they will establish residency towards the end of the year, and then so they have more time to figure out what they want to do. So for example, if you establish your residency in August, you can enjoy almost all the seasons and see how you like it. And then if you don't like it, come May of the year after or before, you deregister. So you're not a registered resident for more than half of a tax year in 1 year in the first year, and you are not more than half, no more than 182 days registered as a resident in the year after. So you tried, you didn't like it, and you deregister from being a resident before triggering that assumption of tax residency.
Okay, okay. So just so I have it clear, if say for example we've taken the Prima Casa thing and we don't change it ever, does that change us to suddenly Italian tax citizens? Because it is Prima Casa, it's
So
residence. Is that
in order to get the prima casa, you get the prima casa at closing in
mm,
the form of a lower tax rate.
right?
And then you have to confirm that by establishing residency.
Yes.
If you don't establish residency, the simple election as prima casa doesn't trigger anything
Ah,
because
okay.
that's not a, you know what I mean? Like you declare to the at closing, you told the notary, hey, I want to become a resident within 18 months. So sign me up for the lower tax rate. And the notary will do that.
Yeah.
But that alone will be perhaps a super mild clue, a very, very mild clue advocating for your Italian tax residency, but it's not a red flag at all. It will
Okay.
be a red flag if after that you register as a resident and stayed as a resident for more than 182 days within the same tax year, though.
Okay. Okay. That
Okay.
makes sense. Yeah. Good. Okay. That clarifies. So that's something to think about, definitely.
Okay.
You want to make sure
Yes.
you
Yes.
that you really overbalance it on one side, so it's very easy to prove where you're a tax resident. So that works. Okay, great.
Yes.
Well, let's look at, we're on the subject of taxes and we're kind of deep into it. What about the 7% Italian tax regime? There's a lot of questions on that. My first question, is that a general tax? Is it an income tax? What kind of taxes are you getting flat taxed for there?
Okay. So it is the 7% is a flat tax for individuals who move to Italy who earn, at the time of moving to Italy, who earn a foreign pension income.
Okay.
So foreign pension income, yes. So let's say someone moves from the US to Italy and they are collecting their pension or Social Security, that qualifies them for the 7%.
Ah,
And the 7% applies, though, not just on that pension income, but on any type of income that they earn outside of Italy.
okay.
So if that person also has, for example, an Italian home that they rent, that Italian home will be taxed the standard Italian tax rates, whatever they are for homes. Might be the flat tax for rentals or might be the regular brackets. If that person has other income in Italy, once again, regular Italian tax rates will apply. 7% only applies to income earned overseas.
Okay.
So, and Italy will consider that they call it a flat tax because A is not progressive, so it's 7% regardless how much income you bring in from overseas.
Mhm.
And secondly, it's flat because it doesn't allow any deductions. So no medical deductions, no credit for taxes already paid overseas over that income and stuff like that. So if, for example, you have home rented in the US and you pay taxes in the US on that rental income, the Italian tax authorities will not allow you to deduct the taxes paid in the US on that rental income.
Okay.
They will just apply the 7% to the rental income.
Okay.
And Yeah, so that's pretty much. As we said, the treaty between Italy and the US is such that rental income is taxed first in the country where the property is. So you might have a situation of double taxation. So
Yep.
what we recommend clients in that situation is try to extract equity and create and basically increase your losses on your property in the US. So that reduces your taxable income and you can invest that money somewhere else where it is taxed only in Italy based on the treaty. And so there's a little bit of estate planning to do there to make it more tax efficient. Totally legal, by the way.
Okay, that's very interesting. That brings up a whole, it's funny, we get one question answered and it brings up a whole can of worms over here of other questions. But those are specific questions for specific circumstances, and my recommendation is go see Nick don't ask me these questions because I don't know. It's go see Nick and his guys, and they'll set you straight. So that makes a lot of sense. Okay, fantastic. Let's hit a little bit on the, people were all very excited about these renovation bonuses and what they call it, the 100% or whatever. And we were excited about
Yeah,
that too, but we realized quickly that a lot of it was a big headache. So I think the first of all, I mean, you've got the super bonus and the eco bonus and the this bonus and the that bonus. That, I never really fully understood exactly how that worked. Was that simply a tax credit that you got? And was it a tax credit on that when you get renovations done? Okay, let's go over that a little bit. And, the whole
sure.
purpose of going over it with you is to try to decide, is it too big a headache to worry about, or is it something maybe to pursue?
Yeah. So let me tell you first that unfortunately, starting in January this year, and progressively the year prior, but this year they have repealed several of those options.
Yeah.
So right now there are only a few left. The most that you get now in terms of tax credit will be in general, you might get just up to 50% on your primary residence.
Ah,
So the home that you, yeah, exactly. And there are a lot of questions about how you define that primary residence. You have to establish residency, but then how can you count on that? Because if you're buying a home that you want to make your home, you cannot establish residency if you are completely remodeling it. Because to establish residency in Italy, we know you have to be there. The police has to come and inspect that you are living there.
yeah,
So they're saying the requirement defeats the whole purpose of helping people building their homes.
right.
And so they're trying still to sort it out. Still early in Italy, although it came into force on January 1st, they're just trying to figure out how it's going to work, basically. But however, the bottom line is the 110% doesn't exist basically anymore. So there's this 50% on your primary residency, and then it becomes 36 on any investment property. So basically, you spend 100, and 36 of that 100 can be taken as a tax credit in your tax return, but you can use 10% of that every year, and it is use it or lose it. And
Okay.
you can benefit, you can use it if you are a resident or not a resident. So as a non-resident, you can only use it if you have taxable income in Italy. For
Right.
example, if you have rental income.
Okay.
So my recommendation, talk with your contractor and ask your contractor to prepare a payment request with a specific information of the tax credit that payment request is eligible to.
Okay.
And then the payment must happen through an Italian bank account. So if you don't have a bank account, you need to go through a property management service. And basically, some of our clients, what they will do is they will send us a form that their contractor has filled out.
Hmm.
And the form has to include the contractor Italian business tax ID
Yep.
and the property owner Italian tax code, the Codice Fiscale, and some other information.
Okay.
And if we are handling our client's property management service, we will basically input all that information in the bank online banking wiring form, and that once we hit send, the Italian tax authorities will get automatically a copy of that transaction plus 11% as a withholding tax will be sent to the Italian tax revenue office. So the contractor will get 89%
Okay.
of that wire. And they also will get a credit for 11% that they can use in their tax return when the next year will come for them to pay taxes on their income. So that helps the Italian government with cash flow, obviously, and also helps tracking transactions. So the 36% or 50% applies to the entire amount. So that and the actual price. Also, it applies not only on applies on material, applies on also professional fees. So if you're using an architect or an engineer or geometra, something like that, in relation to the renovation, also that is covered. So usually that's why I recommend ask your contractor, and your contractor will help you identify the the most efficient tax credit eligibility, and then you make the payment through a an Italian wiring system instead of credit card or an international wire. If you have a plan to live in Italy, that definitely makes sense, even if you are not quite ready to move to Italy, because even if you lose 1 or 2 years of tax credit, you will still have 8 years to make up for it.
Yeah, okay. So just so I have it clear, then basically all of the expenses going into your renovations are the basis of the tax credit. I think that's what you just said. Okay, good.
Yes,
And it's only
yes.
against income that you make. Now, not just income from that property, but your personal income tax. Is that right?
Correct. So if you live in Italy, you have a disclosure and tax payment liability. So
Yeah.
disclosure and payment tax liability with respect to your worldwide income. So if once you are in Italy, yes. So however, if you are, for example, on a 7%, and you pay 7% on all your income coming from overseas, you cannot utilize the tax credit, because tax credit will have no ordinary taxable income um, to offset the credit with.
Okay, so both of
Okay.
both that bonus and the 7% are both for 10 years. And the bonus is payable at 10% per year for 10 years. Is that right? Or creditable for 10% per year for 10 years?
Yes. So the yeah the tax credit is for 10 years. Yes, 1/10 per year. Correct. Yes.
Okay, good. And basically that is something you work out with your guy. It's against your personal income. So that kind of clarifies exactly what I was looking at. So the bonus
Yeah.
thing is gone, the super bonus is gone. I'm kind of glad because I think it was a huge hassle. Everybody got excited about it, and then they got in, and the bureaucracy took over, and it was not really worth it.
Yes.
This looks
Yes.
much better
Yeah.
if
And if
you're living in Italy as a tax resident.
Yes, I want just to be accurate. You are absolutely right that the duration of the 7% and the tax credit almost overlap
Yeah,
completely.
yeah.
But I wanted to make sure that because the 7% actually is for 9 years,
Oh, for nine.
whereas the tax credit is for 10.
Uh,
Yeah, but however, it's just 1 year at the end of the day. It's not. I just wanted to be accurate for the people who are
yeah.
watching this.
Good, good. Thank you for that because I thought it was 10. So let's touch a little bit on the digital nomad visa. I know people were like really excited about that. Is there a limit to them? Are they hard to get? Can you tell us about that?
Sure, yes. So we are extremely excited for the digital nomad visa for so many reasons. One of them being that we were in dire need of it, and a lot of people were waiting for it. And even when it came out, we almost didn't believe that would be a thing. So after a painfully slow start, where consulates really struggled initially to figure out requirements and how to apply the requirements depending on their geographic, demographic, socioeconomic situation wherever they are in their jurisdiction, we saw that actually most consulates have it pretty good under their belt now, regulated, and they are actually um, issuing digital nomad visas. Some consulates very quickly. We have some clients who have received it within days, literally. So yes, so there is not a specific number of visas that they will issue, so there is no restriction. There are a few things that I would definitely recommend. One is if you have the opportunity to choose whether to apply as an employee or as an employer, and they have actually a specific distinction in this statute of law. They call the employee digital nomad visa a remote worker visa, and the self-employed digital nomad visa, they call it a digital nomad visa. So if you have the opportunity to choose, and many people do, go with the employee structure because the employee structure is much easier to to satisfy the requirements. It's so much easier. A letter of employment is sufficient. You don't have to prove a lot of your track record as a self-employed, and just it's just so much easier. However, if you're self-employed, it's not impossible. It's just you need to be aware that it's going to be a little bit more paperwork and a little bit more time to prepare. That's pretty much it. The other thing that we also recommend is if you want to start acting quickly, you may want to, one of the very first things you want to work on is identifying a accredited institution in your home country that is, or in the country where your education was granted or was achieved, an accredited institution accredited by the Italian Education Department that can confirm that that education degree that you got is equivalent to something similar in Italy. So an accreditation certificate. So basically the conversion of your university degree, master degree, whatever you got.
Right.
So that's something that we recommend looking into. And there are just a few institutions that are accredited by the Italian Department of Education around the world. So you identify the one that applies to you, and obviously experts can guide you in that process. Um, and once you do that, something that a lot of people get, I don't want to say wrong, but have a misconception is that they have to continue their employment remotely. But that's actually not required.
Oh,
You could, you have to prove that you can work remotely, but you could be hired by an employer in Italy once you move to Italy,
wow.
very possibly. Yeah, so there's no, not only it is not forbidden, but it's actually a specific reference to the fact that you can be employed in Italy once you move to Italy. And so that's also very important. The visa will last 1 year, and also the permit that you get, the permesso di soggiorno, will be for 1 year, but it can be renewed. So you can renew it multiple years, and after 5 years, you get a permanent permit.
Ah,
So yeah, so finally we see that it is actually a visa like other visas. There is established. There is enough track record that we recommend it whenever there is an opportunity to recommend it whenever there are the requirements, and it is definitely a reliable visa to go for now.
wow, that is wonderful. I mean, that could just really change the whole, all of the abandoned hill towns in Italy and whatnot. They could just be completely repopulated with
Yeah,
families and things like that that want to go there and live in a beautiful area and still be able to work. Now, you said something
yeah.
accreditation for your degrees and whatnot. Is it required that you have a degree in order to get a digital nomad visa?
Yes, it is required. You have to have a higher level of education. So usually the standard, what we usually tell clients, if you have a university degree, that's the best college degree, education degree, or even better, obviously, master or PhD.
Mm.
Um, in some rare cases, you can prove a high level of qualifications based on work track record. For example, you have been in a position of in a high hierarchy position, some job, some employment position for years, and you can document that, and that can prove your high qualifications. That can also satisfy the requirements. But the more you can comply with the formal requirements, the easier the process.
Yeah. Okay, that makes sense.
Yeah, I wanted to mention something since this is something that sometimes people, get excited for the visa, but they forget to think about the tax planning because these two things are especially with the digital nomad visa, you are working, and this is one of the cases where people unfortunately um, miss the fact that when they move to Italy, although their clients, their employer, their company, their LLC, whatever, is in the US or their home country, when you move to Italy, you become an Italian tax resident. You have to report all of that in Italy. And unfortunately, when they realize it might be too late. Meaning, if you're an employee and move to Italy, your employer will have to continue to do your payroll, but has that payroll needs to be done through an Italian payroll accredited agency.
Ah,
So the US entity would have to, appoint an Italian payroll agency because when you receive your salary, someone, and it cannot be your US employer, someone has to withhold your benefit, has to withhold your taxes, has to comply with the equivalent of the W-2 in Italy, your certificate of the wages you're being paid, the taxes that has been with the tax that has been withheld during the year, and Social Security and all of that. So who does that? You cannot do it for yourself. The U.S. employer has to go through an Italian payroll agency. So
okay.
there are payroll agencies that offer that service, and you need to do that because at the end of the tax year, you will get an Italian certification that you have to put in your Italian tax return the year after. If you don't do that, it will be extremely hard to untangle it because you will be in a position where the U.S. company or U.S. payroll has withheld taxes under U.S. rules. So you will have to ask for a refund in the U.S. and try to make up for it in Italy, with penalties.
Yeah, what a nightmare.
Yeah. So yeah.
Yeah.
So yeah, just the point is that doing things like this after the fact is always complicated. So if you are able to perhaps when you move to Italy, you might even convert your contract from being an employee into being a self-employed. At that point, it will be easier to start an Italian VAT number, meaning a small business tax ID, and run your own business as a contractor. That will simplify the process also for your employer.
Okay, that makes a lot of sense. I can see where it could get really, really messy. So you basically just change your status from an employee to an independent contractor and then go in under the digital nomad versus the remote worker. That makes a lot of
Yep,
sense. And that's
correct.
something vital for people to know. You don't just get your visa and come over and forget about everything else. You got to make sure. And that's why I'm going to put in a plug for you guys because that's why whenever you make any kind of move or change or something like that, it's so important to at least consult with the competent legal, authorities or the legal minds to make sure you're doing it right, so you don't come in after the fact and have this big messy mess to clean up. And we've kind of done that with you guys at the beginning with our stuff, and we are so happy we did because it's saved us a lot of headaches. So yeah, there we go. All right. Well, this has been a crazy amount of information. I'm going to have to watch this video several times, but it really did clarify a lot of things that I had questions about, and I think it's going to clarify it for our guys. But guys, if you have questions for Nick, put them in the comments below, and we're going to try to do more of these semi-regularly if Nick is available. And we can answer your questions, and we want to make sure we know what you guys want so that we can address it in future videos. So there we go. Well, thank you, Nick. I can't tell you how much we appreciate this.
Thank you. I appreciate the opportunity. It's always a pleasure talking with you.
Okay, okay, good enough.